Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In this video I'd like to take a look at a setup that was unfolding on Friday just after we did our customer only webinar, and I particularly want to look at this setup, which is this TS3 sell here on a 3-minute chart of the ES, because it did not unfold as anticipated. Again, I repeat, it did not unfold as I was anticipating in the webinar. And I think it's important to show setups that don't unfold as ideal, brilliant, high profit setups, because first of all it gives a better impression of the software if you show bad trades as well as good trades, but also it's important to show this from a learning perspective so we can see what we can do on it. So I just want to review the analysis I was doing in the training webinar at the time and show you how I was looking at this. As normal, we go to the 15-minute chart, and what I was looking at was I had a pivot here the prior day on the 10th, and what I had was a decision point resistance up here that came in on the open on Friday. Now what I was suggesting was, because this was at 15-minute resistance, we had our initial decline down here, which we would consider as a wave 1. We then had our initial correction back here. So what I was saying at the time in the webinar was, if this came up here into the wave 2 or BWPT, which you can see it did, then this could be considered a Holy Grail trade setup if we had a minor ABC correction here. So what I was looking for is, I was actually looking for then a potential strong, let's make that a bit thicker, you can see it, a potential strong wave 3 type of decline down here. Now obviously you can see it didn't unfold, but that was the setup that I was looking at, or potential setup I was looking at, which would have been a potential Holy Grail trade setup. So let's now go and look at the 3-minute chart. Remember, this was our 15-minute resistance up here. If I just change to a 15-minute chart, put that resistance on, come back to our 3-minute chart, you can see it there. There it is. So what I was considering was, here's our major high. Then I was considering this was potentially a wave 1 down here. I was then looking for a potential A, B, C, which you can see unfolded perfectly here into this particular TS3 sell. I was then suggesting that rather than using the minimum wave CWPT, we're probably going to look down here for our typical wave 3 WPT. I also came back to this prior swing here and looked at that there was a potential decision point support off there, so I was suggesting that if we got an ABC setup, which we did, then more than likely the market was going to decline down here into a Holy Grail trade setup. And in fact, at this point in time here, which was around about 12 o'clock on Friday, everything was looking absolutely perfect for a brilliant Holy Grail trade setup. Now, as you can see, the market just chopped sideways and actually drifted up. So in other words, this did not turn out to a Holy Grail trade setup. If you'd held the market, your original stop position here, you'd have actually been stopped out from -1 hour loss. So the question being is, was this analysis wrong? Was it wrong to assume that we were potentially going to get a nice decline, whereas the market didn't? It basically would have resulted in a -1 hour loss. Of course not, and that's why I'm doing this video, to show that the analysis was correct, but the market just had another idea of where it's going to go. And in fact, I stress that on these Holy Grail trade setups, the reason they're so good is not because they have a high percentage of winners. I don't think any system really can have a high percentage of winners for a long period of time. The reason they're so good is when it goes wrong, or doesn't unfold as anticipated, like Friday, the very worst you can get stopped out for is a -1 hour loss, as we did in this circumstance. So the question being is it worth taking a -1 hour risk or -1 hour loss, one risk unit, for a potential profit, in this case of 6.9, or almost 7 times the initial risk? So in other words, if this trade had unfolded, it would have made a profit of approximately $2,700, which is approximately 7 times the initial risk. So in other words, are you prepared to take trades where you risk losing one risk unit, or you risk making, in this case, +7? And that's why the Holy Grail trade setup is so good. It's because the profits are very, very large in relation to the initial risks, but obviously on the other side of the coin there will be times when the trades will get stopped out and you'll have a -1 hour loss. So that's why I'm doing this video, to show this particular trade setup and show that it would have been a -1 hour loss. So it just keeps keeps you looking at the other side of the coin, in other words, the risk control. Now the question being is, for an advanced trader, was there any clues as the market was unfolding that this might not have carried on down as anticipated? Well, yes, there is, because here's our TS3 sell setup. Now what I've taught in the past is when you're in a trade, you should see how the market unfolds, and it should unfold in an impulsive pattern with you. So in other words, if you're short of this TS3 sell, you're looking for a strong decline. Now as the market came down here, let's put the Elliott wave analysis on here. So Elliott wave intermediate, very easy indeed. You can see that this unfolded as an ABC. It came into the typical wave CWPT. That is the most likely area where an ABC pattern is likely to unfold. The market went sideways, then started to rally up. So for this to be impulsive, it should have gone well beyond the typical wave CWPT. So as soon as a pattern like this unfolds, in other words, an ABC pattern unfolds, ABC patterns are corrective. In other words, this will give you an indication the market is ending a correction and more than likely then to go back on the long side in this case. So can you see now how when you're short, let's put the analysis back on, when you are short from up here, to see that the market has only unfolded with you in a corrective pattern, alarm bells should have been ringing, and at the very least you should have had your stop to break even. So the advanced traders among you could have used your Elliott wave knowledge here and known that because the pattern wasn't unfolding with you as you'd expect, in other words going strongly with you in an impulsive kind of pattern, that you should then brought your stop to break even. So for an advanced trader, bring your stop to break even and get stopped out for a zero loss. So that would have been the best case scenario here. But again, I stress that if you were a fairly new advanced trader, so to speak, that you might well have just had your stop at the initial area, anticipating that you were going to get the strong decline down, so you may well have been stopped out with a -1R loss. So the whole idea of this video here was that yes, all the analysis came into place, particularly our 15-minute resistance for an initial decline down, an initial correction up, and therefore we're anticipating a Holy Grail trade setup on the short side. And as we can see here, it didn't unfold. Worst case scenario, -1R loss, but the whole idea of this video is to show a trade setup that did not unfold as anticipated and show you that even though it didn't, it was still the correct analysis and a very good trade setup to take, because when the Holy Grail trade setups work and they go with you, which they do about half the time, you have profits much larger than the initial risk. And that's why the Holy Grail trade setup is such a good trade setup, and it's the favorite trade setup I have in the MTPredictor software program.